Okay, good afternoon, everyone. We are on 29th of April. It's a Saturday afternoon. This is our weekend session. We had a decent week, I think a decent month also behind us. So the first few minutes, as always, in these weekend sessions, we're going to talk about the index, the sectors. We'll take a look at the RRG graphs on stock charts. And then I've scanned the weekly time frame for some prospective trades for next week from the weekly time frame, right? Before we begin with Nifty and the sectors, I was taking a look at the SGX, which posted another positive close, and it's now above 18,200. So the move on the upside continues to extend. The S&P 500 and the Dow Jones also managed a beautiful, pretty sharp bounce back after this sharp sell-off. So these are little volatile, tough times for short-term traders when the underlying trend reverses this quick, and that's where and how you need to be extremely agile and need to kind of position yourself or change your positions as quickly as the market moves. So the overall equity markets, Indian markets, etc., everything seems to have moved back to an uptrend and holding well. The momentum is still intact. We will look for a shift of momentum at least for any kind of weakness, right? So with that, let's come to the sectoral indices. Let's take a look at the Nifty, how it played out. Now, remember, the weekly charts on my left hand side, daily in the middle, and 75-minute on the right hand side. And if we remember, we had a bearish engulfing kind of a behavior, which needs the low to be broken to get triggered. That did not happen. On the other hand, the extension of the move was beautiful. This was like a runaway setup for us, which was more of a counter bar, but nevertheless, the market showed beautiful strength, beautiful resilience. Momentum again. This is where we saw the momentum slowing down, which could have been the early sign of a reversal. This could have been a sign of a consolidation, and in the hindsight, we can clearly see that this was essentially a consolidation, this one. And now we have a reversal move on the upside. 75-minute time frame is stretched, and it's been stretched for quite some time, and that's the nature of strong uptrends. Momentum reading from our M2 indicator is clearly showing that there is no dearth of momentum in this market. We are now knocking at highs that we last traded in Feb this year, Jan this year, and throughout, I would say, throughout December and Jan, December last year and Jan. If we take a look closely at this long red candle, this was the week of 19th of December. I'm talking about this one. Then you would notice that the 50%, more or less the 50% mark of this red candle, the index did manage to scale above this multiple times intra-week, but never actually managed to close. And we are actually knocking those levels. So these are some decent historical resistances. We can perceive them that they can act as some bit of a slowdown, but it's all on the side of expectation. Unless the price proves that expectation, we should not take any position. Just because price is reaching a resistance, that's not a good enough reason to take a short position. If we are expecting the price to respect this perceived resistance, then we should see some signs of slowdown. Then only we can take a position. So do not misunderstand perceived support and resistances to be indications of taking positions. So with that, the market is now in an emphatic uptrend across the 75-minute time frame, the daily time frame, and the month and the weekly time frame. By the way, we have the end of month also. So what I will do is I will change the weekly to the monthly chart and also take a look at the monthly time frame. In fact, it's not a bad exercise for this afternoon, this weekend session, to use monthly, weekly, and daily time frame, because we can then take a look at the monthly charts as well. Now, monthly charts of Nifty is, I would say, okay. This is what the lockdown period, the run-up was. After that, the market essentially stayed range-bound for a significant span of time, gave us a breakout over here, which turned out to be a failure for the next 4 months, and now it's bouncing back. So if I zoom out the monthly chart, the first thing that can come to your mind is this a bounce back after this sell-off? What I mean by this is, can this be the first leg of correction, the bounce back, and then will the next leg of correction open up? Is this A, B, C kind of a correction? Too early to comment. If we take a look at the momentum indicators, it is suggestive of still some weakness. The EMAs, the short-term EMAs has started to improve, and our Heiken-Ashi reading is suggesting that this month was more of a consolidation after the sell-off. So this is a halt after the sell-off, and this is a retracement also. So all boils down to that 18,200 kind of levels that we found from the weekly charts. If we find the index scaling above that and holding well, then probably this is not going to be an A, B, C. Rather, it's going to be a corrective move, and then we are heading towards a new high, all-time high. We should be open to both sides of the market. But as of now, the weekly charts have moved positive. The daily charts extreme, a little stretched, of course. And the monthly charts are just improving after this 3-month correction. For the last 2 months, it's been essentially, number one, consolidated the fall and then retracing the fall. So overall, if you ask me, it's a bullish market. Not emphatically bullish across all time frames, but the weekly, daily, 75-minute time frames are pretty strong. Monthly is improving. So with that, let's take a look at the Bank Nifty. Now I'll take a look at the Bank Nifty monthly charts first. Now Bank Nifty monthly charts, thanks to this recent outperformance, is almost knocking at all-time highs. And this is the area where, you tend to see some kind of a peak and trough divergence with your short-term momentum indicators. It's not uncommon to see these kind of behaviors. When these divergences form, essentially the way to read this from the charts is you're not in a very, very high momentum market. I'm talking about monthly charts. So we need to be a little careful going forward if we are going long on any of the banking names, especially heavyweight banking names. But by the elements of the trend, the momentum on the monthly, on the weekly, on the daily, there's nothing to worry. It's a strong uptrend and holding well. The close of the day, the close of the week, the close of the day, and the close of the month is at the highest point of that time frame, which clearly reflects that it's a strong uptrend. As I just mentioned, that in these kind of situations, you will tend to start to see these kind of formations of divergences. They are just formations so that we are aware that if there's any kind of a surprise on the downside, we're aware of it. It should not act as a surprise. But Bank Nifty also did support the market really well, and it's in a strong uptrend. We'll quickly take a look at the rest of the sectoral indices. Auto monthly time frame, I would say, is still kind of range bound. It's a flaggish kind of a behavior on the monthly time frame. Early signs of momentum shift, but we did not get, essentially, we did get a counter move this month. So if this month's low holds, upsides definitely. By any case, I'm just trying to draw a very bad situation on the downside. Let's say, for example, this range bound behavior, all of a sudden it turns down, then the serious weakness will come only below this month's low. Till then, I think this oscillation within the auto pack is likely to continue. But overall, of course, it's moved into an uptrend and holding well. Finance, just like the Bank Nifty, is also doing good. One can say it's looking like a cup and handle kind of a behavior. We can get a breakout. Possible, but never kind of lose focus of these peak and troughs that's forming on the monthly time frame. Again, I want to flag these formations, but I do not want to sound bearish that, okay, divergences are formed and then the market will fall. I don't want to say this because divergences do not mean that. We just need to be a little careful. Bullish again from the financials. FMCG supported the overall markets really well this month thanks to ITC. Strong uptrend, structural breakout, beautiful structural breakout. Again, one can say it's a cup and handle kind of a behavior and a breakout. So No problem over here. I think one should maintain the long-term positions should stay long. Short-term traders can continue to find some opportunities. I will take the example of this CNX FMCG chart to explain something theoretically. See, in this FMCG weekly charts, you did find these kinds of drop in peak and trough, which is essentially nothing but a slowdown. It's a slowdown. The FMCG stayed completely range bound on the weekly time frame. The monthly time frame is nothing as of that. So it's been holding really well. So a reminder of these divergences are essentially of consolidation, slowdown, not necessarily correction. The way we should keep this in mind is when we find such a reading on our charts, if let's say for example this falls, the index bounces back, could not take out 50% and then starts to fall, then you can position yourself on the short side because you had kept these in mind. So from that perspective, CNX IT, now thanks to Infosys, big gap down, decent amount of a bounce back that we found thanks to the market. But you can see the picture. The CNX monthly IT monthly chart is not that great. It's just knocking into some really important levels on the downside. Any kind of a break of this week's low or last week's low can be really bad news for the entire pack. Still, the trend is down across the monthly, weekly. Daily is improving. We can see this. Short-term traders can look for some opportunity. Last week we did talk about HCL Tech. This week, in fact. But I would repeat what I was saying in one of our live classes this week, that IT is something that either you approach from a very short-term point of view or a very long-term point of view. It will be very difficult to create a view with confidence. How will the IT look like 2 weeks from now? We can have some confidence 2 days. We can probably have some confidence 2 quarters or 2 years, but the mid time frame is difficult. So IT is trying to improve, but long-term picture is not that great. Media, not good. I wouldn't say it's a good looking chart. It's a pretty weak chart. The monthly charts is just giving some counter moves, a break of these lows, and you have another leg on the downside. But the weekly charts are improving. The momentum is definitely shifting. So I would say it's a make or break for the media. You can look at some media names like Z, Sun TV, which has the maximum weightages for whether it gives this breakout on the upside or on the downside. Metals. Now this can be interesting because the monthly time frame essentially was a broadening, or I would say is still a broadening pattern. And in this broadening pattern, you tend to see false breakouts, reverse move, couple of months of counter move. We have a good looking Heiken-Ashi. Monthly momentum is not in our favor, which means that if any of the sectors start to correct a couple of weeks from here on, and if amongst those sectors we tend to see metals, then metals from its higher time frames, it has a decent amount of room on the downside to fall. Only if and only if the monthly lows are broken. Till then, the weekly charts have improved thanks to these divergences, the M1 divergences we had here. So it's giving a technical bounce back after a significant correction. As of now, it's too early to say that whether this technical short-term bounce back has the strength to take it to an all-time high. We don't have that clarity. One important stock you should always keep on your radar is Tata Steel. But if let's say we find the index on Tuesday morning takes out 18,200 and then starts to slip, rest of the week is not holding well, you find some odd stocks coming down, then in your shorts list, I think you should definitely keep metals as a prospect. Nothing of those shorts are clear yet, have not formed yet. I will update you in our live sessions every week. But the monthly chart of CNX metal should definitely excite you on the downside below this month's low. I don't have to tell you this, why this is a beautiful shot on the downside. Pharma, pretty impressive bounce back. There was no M1 divergence as such, so it kind of just turned around all of a sudden, and it gave a beautiful one-way rally on the daily time frame. The weekly 1, 2, 3, 4, 5, 6 consecutive weeks of a move, and which looked like which started to look like a short-term bounce back in a structural corrective mode, has actually now taken out more than 50%, and probably it's going to take a break in this area. So pharma also in an uptrend, excuse me, but the daily charts slowing down. The signs of slowdown is clear. We'll see if we get any opportunities. Real estate, impressive. This month was around 15%, 14.9%, big move coming in. So these supports, they held well. Now when these supports, perceived previous lows act as supports, it's a good sign for the stock or the chart. Your supports, your perceived supports actually worked, which also means that this is a very strong level. Also from the point of view of breaking down. Now, breaking down question shouldn't come now, because the index is way above its breakdown point. These are very strong monthly supports for the chart. At best, we are looking at this range bound activity from Realty. Realty is, if you can take a look at the weekly charts, this is what it is doing. I think it's really good for the short-term trader. You will get swings on both the sides, and that's good for us, not bad. So view on Realty, still bullish, stretched. We will not chase. We never chase a stock or an index which is up 15% in a month. We're just trading our view, which is bullish. Consumer durables, not that great. Again, the monthly charts are just giving a counter move and can open up on the downside. And then oil and gas indices, again, trying to give you a bounce back here. Weekly charts, again, not that good. So we've got few sectors like the consumer durables, oil and gas, metals, which can underperform, but the others seems to be stretched and holding the markets well, like the banks, the financials. Surprise rally coming in from pharma and real estate. IT definitely structurally weak. Let's quickly take a look at the RRG graphs and try to find out whether that corroborates our view, whether RRG graphs corroborates that view or not. Now I'll quickly first reduce the tail length to 1 week and sort, just to see and have an understanding where most of the gains came in last week. PSU banks, real estate, there you go. IT gave you that bounce back. Small cap, mid cap. Now small cap, mid cap, 3.2%, 2.7% gains last week on 2.5. That's not far off, but broader markets outperforming. Media, we saw the chart was not that great. Pharma took a breather. Pharma, healthcare, more or less close to each other. And there you go, oil and gas, and you have the metals. So this is where your pocket of weakness lies. Now, I like this reading because, see, at the bottom end of percentage-wise change last week, these are the names which are at the bottom end. They gained the least. And if you take a look at their tails, most of them are the weaklings. Most of them are in the lagging quadrant. So our view that metals are giving a technical bounce back, and if the market falls, can fall. Oil and gas, we did take a look at the chart. Media, we did take a look at the chart. So these names are the laggards. They're in the lagging quadrant. Now let's extend this tail length, and let's say we go to, this is the weekly time frame. So let's see a quarter. So let's do a 12 weeks thing. Let's fit it out. Now I'm going to sort the tails. And we'll see FMC. Now this is not much of a surprise. FMCG in the leading quadrant, but it's vertically dropping, means it's losing momentum. Hindustan Unilever is one drag in this pocket. So still positive, but it's losing some short-term momentum. That can be a sign of reversal. Mid-cap also in that quadrant, and financial services. So okay, the positioning of financial services, the positioning of mid-cap is nothing great. But FMCG is definitely showing some signs of momentum slowdown. We need to be careful if we're going to go long on FMCG. Not the best of behavior, not the best of behavior of these tails. Energy is showing some strength. Now, Reliance did give a move. We'll take a look at the oil and gas, the OMCs in this pack. Then we have Realty. There you go. That's good. Consumer durables is showing a bit of a strength. The charts are not that great. Pharma oscillating in that improving quadrant. Healthcare is also there. Small cap, more or less, nothing much of a tail. Just kind of a stoppage right at the middle, right at the center. Amongst these names, I would say energy is definitely showing good improvement of the underlying momentum of relative strength. To follow these graphs, it should ideally behave like this. So we can get some improvement from the energy pocket. Weakening, according to the RRG graphs over the last 3 months, we're talking about a quarter now. PSU Bank is now picking up. Now you see PSU Bank was the biggest gainer this week, and we could clearly see that for the last 1, 2, 3, 4, this was the 5th week. For the last 4 weeks, the momentum was improving. Momentum improvement is an early sign which got reflected. IT, I wouldn't say it's not looking good. I think underperformance from IT is what RRG is suggesting as well, which more or less corroborates with our chart. Same with auto. Bank Nifty, what it is doing is actually gaining. If you see, the color is yellow. I know I'm not too sure if you can see very clearly. While it was going down like this, it started to go up now vertically, which means momentum is improving. But positioning is not that great, so we need to be careful. And then towards the end, it's media, then it's metal, and then it's oil and gas. Now, good thing about metals and oil and gas is they're gaining momentum. Though their positioning is in the lagging quadrant, underperformer, they're gaining some momentum, which means you will see retracement. We saw that in metals, but it's in the weak quadrant. So, more or less aligns with what we kind of found out in our analysis. Metals, media, still not showing that signs of strength. So as of now, it looks like a retracement. If we get shorting opportunities next month, we might go for it. Auto is definitely an important sector to keep a look at. It's been oscillating, whether it shows any signs of weakness. Bank Nifty, financials gave a great move, and they might be stretched. But overall, it's a bullish market. It's holding well. The sectoral rotation is behaving pretty good. Need to see how well it sustains about that 18K mark. We have stayed predominantly bullish in our trades in the month of April, this month. Very less number of trades. I'll share the performance sheet with you soon next week. And we would continue to keep the same strategy going forward, a bullish strategy. But in between, if we get a shorting opportunity, which looks good, we will not hesitate. In terms of our open positions, I think from the weekly time frame, we have Msumi as the trade which is still open. Now I'm going to shift back to the weekly, daily, and the 75-minute time frame. And we took a trade over here, and it's closed really well thanks to the markets. The markets are supportive. The stock is up 6.5% this week, and we went long. It's the open position that we have. Now I will scan the Nifty 200 universe for you on the weekly time frame, and we'll discuss few opportunities very much like this for the next week ahead.